So let me give my take on the Evergrande crisis. If you have been reading the mainstream news for the last couple of weeks, they've been doing a very good job scaring the shit out of people. So what they're telling people is that Evergrande, which is this property developer, owes $300 billion and is likely to go bust and default. And if it goes bust, what's going to happen? A lot of banks are going to go under. A lot of banks will, cut lending to other companies. It would trigger a credit crunch, cause the whole Chinese financial system to collapse, and the global economy to go into a financial crisis. And they're calling it similar to the Lehman Brothers event back in 2008. So those of you who don't know, back in 2008, Lehman Brothers was one of the US oldest banks. So when Lehman Brothers collapsed, it triggered the global financial crisis. So the media initially has been saying that this could be China's Lehman Brothers moment. Now, I never wanted to talk about this Evergrande crisis or to make this video because to me it was ridiculous. Everything I read in the media was completely blown out of proportions. To me, it's a non-event. Okay? But seeing that I've got a lot of emails and comments from people saying, Adam, can you talk about it? Can you talk about it? Because I'm shitting my pants. Is this really true? I thought, okay, fine, let me talk about it. And let me just explain why I'm not at all concerned about this. In fact, I'm taking advantage of it together with my students. The last couple of days, we've been buying shares of our favorite companies, taking advantage of people's short-term fear and uncertainty to buy great companies at discounts. So how did this whole thing start? Well, for many, many years, a lot of the property developers in China were highly leveraged, which means that they were taking more and more debt in order to expand their business. And you can see, for example, the financial leverage of China Evergrande is 12 times. That means they've got 12 times more debt than equity. So there's always been a fear that one day these property developers, they would collapse under all these debt. And that's why I never dared to invest in property companies in China for many, many years. Now, the second problem is that in China, property prices have been soaring because of these developers, again, increasingly pushing up prices. So much so that now China is the most unaffordable housing country in the world. So to give you an idea, in Singapore, the average home price sells at 20 times the person's annual income. So in Singapore, the average person makes about $60,000 a year. Multiply by 20, that's $1.2 million. So the average Singapore apartment is $1.2 million. And that's for a really small, two-room apartment. And if you think that's expensive, in China, for example, in Hong Kong, in Beijing, the average home is selling at 46 times their annual income. So houses are becoming more and more unaffordable, and these property developers, those bastards, have been pushing up the prices, and in the process to grow, they are taking more and more debt. So all this has been unsustainable for many, many years. Now, last year, the Chinese government said, okay, enough is enough. We have to make sure housing becomes more affordable, number one. Number two, we have to get these property developers to lower their debt, to deleverage, in case one day, it gets out of control. So last year, they had a new regulation, which I think is great, but it should have been done earlier. So the Chinese government said, okay, for property developers, you have to meet 3 conditions in order to borrow more money from now on, because they are borrowing every year, right? They say, okay, your debt to asset ratio has to be less than 70%. Your debt to equity ratio has to be less than 100%, and your cash holdings divided by short-term debt has to be more than 1. You meet these 3 requirements, you can borrow more money. If you can't, too bad, you can't borrow anymore. And if you can't borrow anymore, you're gonna run out of cash. Okay? And it so happens that China Evergrande is one of the companies that failed all 3 regulations. Now, in the past, they could just keep borrowing and borrowing and borrowing and keep rolling, right? But now it's like, oh shit, they can't borrow anymore. So when they can't borrow anymore, what happens? They run out of cash, okay? And what's their main source of cash that they have besides borrowing? Would be selling more and more property. As they sell more and more property, people put down payments, they take the cash and they roll the cash. All right. In fact, if you take a look, you can see that there are pre-sales of properties, which means even before they build a property, they take in a lot of deposits from customers, and that's their main source of funding. Now, once people in the market knew that Evergrande was in a credit crunch, and now they are kind of like having this problem, what happens? People do not dare to buy their properties anymore. So Evergrande was forced to cut their sales price by 25-30%, giving big discounts on their properties, hoping to sell them to get cash, right? But even then, nobody would buy. Well, yeah, there are people who buy, but their sales have been plummeting. So if you take a look over here, you can see that their property selling prices have been plunging. And even then, in the last 3 months, their property sales have been dropping, right? From 71 billion to 43 billion to 38 billion. And traditionally, during this period, usually property sales does very well. So in fact, other property companies have been selling very well, but for Evergrande, people are afraid to buy their property because they're wondering, will they even complete construction of the property because of all the bad PR? So because of that, what happens? They can't sell the property, they can't get cash, they can't borrow money, so they're running out of cash. So, and that's why they can't pay the interest to the banks, which they owe money to, and they can't pay interest to the bondholders who have lent them money. Okay, so how bad is the situation? Now, some of the media is making it out to be really bad, like they owe $300 billion to banks and bondholders, and they default. All this is going to trigger financial crisis. Well, let's take a closer look at their balance sheet. So first of all, we are interested more in their liabilities, okay? Yes, if you look at their total liabilities, it's $300 billion. But out of that $300 billion, you can see that the actual debt that they owe to the banks and to bondholders is only $88 billion. Now, you can't compare this to Lehman Brothers, because Lehman Brothers owed like $600 billion, okay? And most of Lehman Brothers' assets were financial assets like derivatives, mortgage-backed securities that basically went to zero. Whereas for Evergrande, their assets are mainly real estate, land, all right? So land and real estate, they hold their value more than financial assets that basically go to zero when there's no more confidence. So their land, their real estate are solid assets. So their liabilities, number one, a lot of it is backed by their assets. So a lot of the banks that lend them money, they have these land and real estate as collateral. So that's the first thing to understand. Second thing to understand is that what they really owe, again, to banks and bondholders is not 300 billion, all right? It is actually $88 billion. The rest of what they owe are basically liabilities like 112 billion US dollars. These would be things like they owe in terms of uncompleted projects. So homeowners buy houses, they put a down payment, and they need to get their properties delivered to them. So all these are the liabilities which they owe their customers. Now, right now they owe roughly about 1.6 million apartments, which they need to build and deliver in the next couple of years. If they don't deliver it, of course, a lot of people are going to get really upset and they're going to lose a lot of money. We'll talk about that later on, all right? Now, they also owe a couple of $1 billion in the wealth management products they've been selling to customers as well as their own employees. That's right, those bastards, right? Now, they also owe money to suppliers, right? And that's like 103 billion. But again, let's take a look at the actual debt that could really so-called trigger a credit crunch or financial crisis. That's only $88 billion, which is not that much. Now, out of the $88 billion, 61 billion are owed to banks. And all the banks are Chinese banks. They are not US banks, they are Chinese banks. And most of these banks are owned by, guess who? The government. They're all state-owned banks, okay? Now, so how much do they owe to the bondholders? Bondholders, they owe 27 billion US dollars to bondholders. And out of the 27 billion, 8 billion would be to local bondholders, and 19 billion would be offshore, which means to say owed to the US financial institutions, primarily US banks like BlackRock and Vanguard and Fidelity and all those things, right? So Is $19 billion significant to cause a ripple effect to the international community? No, it is very, very insignificant, right? In fact, because of this news, if you look at the shares of BlackRock, the asset manager, it dropped quite dramatically. And instead of panicking, I actually took a long position into BlackRock. So you can see that I like to take advantage of the media that scares people and people sell. I like to buy, right? So when the news came out that BlackRock is one of the major bondholders and the market panicked, right? And you can see the price drop. What did I do? I went long on BlackRock using options, and I'm going to show you my position right now. So right there, when it dropped, boom, I executed a bull put spread using options right there. Can you see BlackRock over here? I entered a bull put spread at a 70.80, 70.70 strike price for 95 cents. And then after I entered, the price dropped to 46 cents, which is good for me because when you sell options and it drops, you make a profit. You can see my unrealized profit from BlackRock in just 3 days is already $1,000. All right, so I've been making a lot of money taking advantage of this panic. The more it panics, the more I buy, the more I go long on options, and the more money I make, right? So you got to think logically and not get caught up in the panic and be like a lot of dumb investors, and they see this panic, oh my God, we're gonna die, and they sell. And the moment they sell, it goes up again, right? So a lot of my students have been buying as well together with me because we understand that this whole thing is a non-event. It's been blown out of proportion by the media. So take advantage of it, all right? Make money from it, okay? So 2 questions we need to ask. Question number 1, will Evergrande default on its debt? Will they not pay interest to their bondholders and to the banks? Just yesterday, the Chinese regulatory authorities already told Evergrande, you better not default on your debt. You better pay back your investors. You better pay your interest to the investors. You better build those apartments. You better deliver those apartments to your customers or else, okay? So the Chinese government has already told them, we're not bailing you out. You better not default on your debt. So will they default? The answer would be 50-50. Honestly, I don't care. I don't care if they default. Go ahead and default, okay? Why? Because again, the second question would be, if they default, will this lead to a financial crisis in China? Will this derail the Chinese stock market recovery, the Chinese internet recovery? Will this derail the US S&P 500 bull market? Hell no, it will not. What's the probability of a Lehman Brothers event? Close to 0. So no worries. Why? Because first you have to understand that the Chinese government are control freaks, okay? And their primary objective is to ensure social order, social and financial stability. So there's no way in hell they're going to allow this to happen. There's no way they're going to allow this company to screw the banks and to screw the millions of homeowners that are owed apartments. So what is the government likely to do? Very simple. Now, this is nothing new because the government has done this many times in the past. There have been many companies in the past that have also had huge amounts of debt where the government basically, they went in and they took them over and they restructured the whole company and broke them up, and in the end actually made money from these companies, okay? So what's likely to happen would be if Evergrande is going to go bust, if they are going to default and it looks like they're going to go under, the Chinese government will take them over, okay? They'll take them over, they will restructure the company, and they will liquidate it in a very orderly fashion. So what will they do? Now again, Evergrande has a lot of assets, okay? And they've got all these 1.6 million of uncompleted apartments to build over the years to deliver to the homeowners. So what the government will do will be, they will get other property developers to take over all these uncompleted projects. In exchange, they will give these other developers the land and the land banks and the properties owned by Evergrande. In other words, they're going to take Evergrande, they're going to chop them up into pieces, take the land, take the property, give it to other developers and say, okay, you guys take over the projects. So by doing that, the homeowners will be okay. They'll get their apartments, their deposits are safe, and they'll be happy, all right? other developers would also benefit because they're kind of like going to pick up the pieces of this dead carcass. So they will benefit as well. Although in the short term, their borrowing costs could go up because of this uncertainty in the bond market. But the stronger developers, I think in the long run, that are not that leveraged would benefit from this, okay? Now, next question would be, how does this affect the banks? Because remember, the banks, in fact, there are over like 123 banks that have lent money to Evergrande. So if Evergrande doesn't pay back the banks, would the banks be in a shit house? Will they run out of liquidity? Will they not lend to other companies? Would that trigger a crisis? No, okay? Why? Because first of all, a lot of these property loans, the losses have been already provided for. In other words, banks have already made provision for many of these bad debts. To give you an idea, the total commercial bank loans, not just Evergrande, but in the total Chinese economy, total commercial bank loans related to property amounts to 10 trillion renminbi, 10 trillion in total. Now, out of 10 trillion, if you look at the China banks, they've already made loan loss provisions for 5.4 trillion renminbi. In other words, the banks have already made provisions for half of these loans. In other words, even if half of all the loans are in default, which is going to be really difficult, right? The banks have already accounted for that. In fact, every year, the banks are increasing their loan loss reserve by 2 trillion annually. So the banks, in a way, are pretty prepared for this, okay? Now, the small banks may be in trouble, okay? But the majority of the loans are backed by the big banks, which are all state-owned, which are all owned by the government anyway, okay? And again, it's backed by the real estate as collateral. So this is very unlike Lehman Brothers, where again, a lot of the assets were financial assets that went to zero. But in the case of Evergrande, they have real estate assets, okay? So to me, the banks are going to be fine, okay? Now, how about shareholders? Now, the shareholders are the ones that are going to get screwed. Okay, so if you own shares in Evergrande, I'm sorry, too bad, you're going to get wiped out, right? And that's why I keep telling people, don't invest in companies with high debt. This is the shit that happens to you when you buy companies with high debt. Now, how about bondholders? Bondholders, they will probably take a haircut. So what does a haircut mean? Haircut means they will not get all their money back, but they will take a big discount to their loans, right? So for every $1 which they loan, they may get back 25 cents, okay? This will piss people off, but will it trigger a financial crisis? No. And that is why, to me, this has been nothing more than a nothing burger. So this Evergrande crisis has no fundamental impact on the US markets or the global economy. If you look at the majority of the companies on the Dow Jones S&P 500, they have got no or insignificant exposure to Chinese real estate. But what's interesting is you notice that market makers and market manipulators, they take advantage of the mainstream news to push prices down and to scare retail investors to sell to the institutions that they get to buy at a better price. And that's exactly what happened a few days ago when we had a sell-off in the US markets. And people say, oh, it's because of the Evergrande crisis, because of this contagion. Yeah, bullshit. In fact, you can see on my chat group, and that's why it's really important to be in my chat groups. This was back on the 21st of September. I said that as usual, the news media is spinning this nothing burger into a sensational fear story to scare weak hands to sell their shares, right? So either ignore the news completely, which I tell most of my students, ignore the news, or do in-depth research to not get fooled like the rest of the sheep. So we took advantage of it. So besides entering BlackRock, you can see I also entered the Dow Jones ETF. I took a bull put spread trade right here when the Dow dropped on that fear, and I took that long trade. And in the last 3 days alone, I'm just up about $500 on that trade as well. So really, no concern about the US markets. The uptrend is there. It's still in a very strong bull market, but as usual in a bull market, you expect corrections along the way of the bull market. And every correction is an opportunity to add shares of fundamentally good companies. In fact, you can see 2 days ago, my students in my chat group were all really excited to get a chance to add great companies like Facebook as well. So how about the China markets? Am I concerned about the impact on China markets in the long run? Will it affect the recovery of Chinese internet stocks? Will it affect the economy? I'm not concerned at all. Although yes, in the short term, you'll create short-term panic in the markets, short-term sell downs. That could happen, but I'm not too concerned because again, for Chinese stocks, I'm invested for the long run. So that's the difference between trading and investing. I never suggest trading in China stocks because they're so volatile. So all the China positions I have are investments. Currently, about 25% of my entire portfolio is allocated to China stocks. So I hold Alibaba, I hold Tencent, I hold Ping An Insurance, and many of the Chinese ETFs. And some of them are still below the purchase price I paid for some time ago, and I'm fine with that, right? It doesn't bother me at all. So for example, if you take a look at my Alibaba stock, I'm still happily holding it, right? So my average price is about 217, and now it's like 146. So it's 30% below my average price. So does it mean it was a bad investment? No, not at all, right? Because when I make an investment, whether it's a good investment depends on the underlying business. I don't care about short-term sentiment. So if I look at the underlying business, sales are growing, cash flow is growing, and I'm very certain that, again, in 2, 3, 4 years, it's going to be double, triple the value today. So I look at the underlying business. Short-term volatility, it can go anywhere, right? Now, if it goes a bit lower, I may add more shares, but again, I follow strict portfolio allocation rules, so I won't add too much. For Tencent, I'm still slightly above the average price. JD.com slightly above it as well. And another example is like Ping An Insurance, right? Ping An Insurance has dropped like 50% from the highs, and I'm still holding a sizable chunk. Am I concerned? Not at all. Because again, looking at the fundamentals of the underlying business, there's nothing wrong with the business. And people are freaking out because of Ping An's exposure to the real estate sector. Yes, they have an exposure, but it is manageable. It's kind of like 3% thereabouts. Okay, so as usual, the market's overreacting to it. It's way undervalued. And yes, I am still adding more Ping An shares for my dividend portfolio. All right, so again, for those of you who have invested in Chinese companies, if you have bought fundamentally good businesses, you don't care about the short-term ups and downs. You take a 3 to 5 year view, you will do very, very, very well. Unlike the US markets that are dominated by institutional investors, China markets, majority of the buying and selling are dominated by retail traders. And these guys are really stupid and dumb, right? They buy and sell based on emotions. They treat it like a casino. They don't look at the underlying business. So in the short term, you can get huge volatility. But again, I love volatility because as an investor, it creates the mispricing of businesses where businesses can be 30, 40, 50% mispriced as long as you don't get emotional and you think logically, you buy them when they're undervalued and you got the patience to hold them until the sentiment changes. That's how you make the big money. Okay, so again, if you look at the Hang Seng Index, you can see because of the China crackdown, because of Evergrande, it's like, this is really choppy, right? And people are freaking out. But again, if you take a longer term view on the markets, if you look at the long-term charts, you can see that, in the long run, it will always go higher. So I like to end off this lesson by really quoting two people. And the first person is Peter Lynch. And he said that your ultimate success or failure as an investor depends on your ability to ignore the worries of the world long enough to allow your investments to succeed. It's amazing. If you look at, for example, the S&P 500, it gained 495% from 2009 to 2019, right? 10 years, it went up 500%. But most people did not make money, or they made less than half of this return. Why? Because along the way, there were so many reasons, so much bad news that caused people to freak out and to sell good businesses. right? All the way, all things from like S&P downgrades its debt. You've got the US government shutdown. You got the fact that there was a bit of a taper tantrum over here, global stock market sell-off, Brexit, and S&P enters bear market. And you got to learn as an investor to ignore all this rubbish. Well, not ignore it, but take advantage of it instead of freaking out from it, right? And the other quote I'd like to share is from Benjamin Graham, the father of value investing. And he said that the market is a pendulum that forever swings between unsustainable optimism when the market gets too expensive and unjustified pessimism, which makes them too cheap. And that's where China is right now. The intelligent investor is a realist who sells to optimists and buys from pessimists. May the markets be with you, and I'll see you in the next video. Be sure to subscribe. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.